Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to share with you guys 5 high quality businesses that potentially will be a very good addition to your portfolios. I do own some of these companies in this portfolio, and I'm going to give you the full details about each one of these companies inshallah by the end of today's video. If you haven't joined us at the Patreon account, it will cost you about 15p per day. You got a lot of things out of that. You get all the buys and sells that I make regularly. You got the family portfolio, you get the dividend trackers and so on, you've got the ETF tracker, and then on top of that you get a private Discord where you can actually talk to a lot of brothers who are very much like-minded, want to invest in Sharia compliant. They share everything from their own stocks they're buying, recommendations, news, everything you can think of. On top of that, you got the Sharia compliant investing ebook. I normally share things like for example, right now I've shared 15 different companies that are actually undervalued, that basically based on Morningstar valuations. I put the spreadsheet together, I share it with the community, and there's loads of little things like that you could potentially get your hands on. So join us there. And if you can't do that, of course, as always, please like the video, subscribe to the channel, because it makes absolutely huge difference to me and to the community inshallah. So we are right now, it looks like we're waiting for Nvidia to report. They will be reporting. Nvidia as well as Salesforce and CrowdStrike are all reporting after close today. That's about an hour or so from now on, so it'll be interesting to see what they come up with. That could potentially crash the markets or completely change the dynamics of the markets. We will see what happens. Regardless of whatever happens, just remember these little quarterly reportings does not mean a lot to us as a long-term investors. So just keep an eye on your portfolio, but don't panic if you see a lot of the stocks that you own, especially if you own the semis. You might see Broadcom, for example, down another 10-15%. I think they're down quite a bit today, about 2-something%. So you might see them down again as much as that, or even more today. Salesforce is also down. I think CrowdStrike is down as well. So we will see when they report and whatever happens, but just think about the long-term investment. Don't think about just what's happening right now. So what I want to do now is just go over the 5 companies, and I want to make sure that you understand what we're looking for here. And these are 5 companies that have a wide economic moat. And that just genuinely means these companies have a competitive advantage over their competitors and so on. They have an excellent dividend, so they have a safety that is very high. They've got free cash flow here that is growing every single year, and they're expected to grow their earnings basically quite a lot of them, especially 4 of these companies are growing their earnings really nicely. So let's get started. I don't want to make the video any longer than it needs to be. And the first one is a semiconductor company. This is KLA Corporation. They have a market cap of over $109 billion. They have a wide economic moat, as I said at the beginning. It's $837 per share right now. I sold this company when it was trading, I think, about 300 or something. This was probably one of my mistakes of selling this, like one of the investment mistakes that I've made so far. At the time, I think it was about closer to 400, but since then it doubled, as you can see here. Now, dividend yield is 0.7, payout ratio only 24%, and latest increase was 12%. Now, the 5-year growth rate, we're looking at about 13%. The dividend streak for 14 years of increasing that dividend, $5.80 is what you will get for every share of this company that you own. 71%, which is absolutely amazing, so that's a save. The last 5 years, they grew their revenue compound annual growth rate about 17%. The EPS about 36%, profit margin 28%, return on equity 87%, and return on invested capital of 34%. They have excellent free cash flow. Basically they grew there. Basically they've given a total return in the last 10 years per annum 27%, which is absolutely amazing. Growth estimate for the next year 13%, 17% after that, 21% premium right now. $670 per share is where they think the price should be. This is a very high quality business based on the metrics that we're looking at right now, and of course it's slightly expensive right now, so I would probably wait until it hits maybe 650ish if it comes back down that much, but I can't imagine that happening. But again, anything can happen. If we get a correction, which is about what, 10% to 20%, if we get 10% or more, that could easily basically be, we would be hitting around that target. Now the next one, before I get into it, I just want to show you in terms of revenue side of things. By the way, according to Seeking Alpha, Wall Street as well as Quant, they're actually all buys and strong buys from Quant, which is very interesting. because you don't normally see that. And you can see here they have a growing revenue from $2.8 billion to $9.8 billion, and gross profit about over almost $6 billion of that $9 billion or $10 billion, whatever you want to call it. The next one is Intuit. Again, we've talked about this company recently. 175 billion market cap, wide economic moat, $618 per share right now. In terms of their dividend, 0.67. Again, this is a dividend grower. It's not a basically how we're not worried about dividend yield. We're worried more about the total returns in the next 5 to 10 years. The payout ratio only 21%, so that means they have a room to grow it. Latest increase was 16%, and the 5-year growth rate of 14%. Dividend streak of 12 years. That means they've increased that dividend for last 12 years every single year. Annually they will give you $4.16. Safety is 98%, so that's 99 is the highest, so that's almost there. The 5-year growth rate when it comes to revenue for the last 5 years, we're looking at about 19%. When it comes to the EPS, we're looking at about 14%, which is absolutely perfect. Profit margin 18%, return on equity of 16%, return on invested capital of 15%. $4.6 billion of free cash flow right now. Total return the last 10 years, we're looking at about 23%, which is absolutely amazing. Now, growth estimate for next year, 15%, 14% after that. So remember, this is just an estimate that could go up or down depending on what basically the company is doing. Okay, 14% premium right now, $550 per share is basically where they think the price should be. So right now it's $618 per share. Now, if we go on here and check basically into it, let's find that company. As you can see here, basically it's a buy from Seeking Alpha. I can quickly show you in terms of price wise, $712 per share. That's about 15% upside from where we are now. In terms of the financials, if we just focus on the income statement and we look at the total revenue, you can see from $4 billion about 10 years ago to right now $16 billion. And guess what? Their cost of that revenue is absolutely amazing. Okay, we're looking at $3.3 billion, okay, and they are taking home more or less basically almost $13 billion. Of course, all of that, they have to pay some taxes and all sorts of things, and then the net income is about almost $3 billion. So they're making about $16 billion and keeping about $3 billion, which then kind of contributes to that very important free cash flow, which is quite good. Now, the next company we're looking at today is Home Depot. This is another company that I own in this portfolio, and I do own Intuit as well, by the way. I'll show you at the end of the video. 371 billion market cap, wide economic moat. This is the biggest when it comes to home improvement in the US for professionals as well as individuals. $372 per share right now. Dividend yield of 2.4, which is really good. The payout ratio right now is only less than 60%, which is nice. Latest increase was 7%, over 7%. Let's call it 8%. The 5 years are 14%, and they've increased that for 15 years in a row. You'll get $9 for every share of this company that you own. 87% safety, which is absolutely huge. 7% when it comes to the 5-year growth rate when it comes to the revenue side of it. EPS, we're looking at about 8%, and profit margin about 10%, return on equity over 500%, and return on invested capital of almost 30%. Free cash flow, check this out, $16 billion, almost $17 billion of free cash flow right now. Total return the last 10 years about 17%, coming from home improvement. That's absolutely amazing. Growth estimate next year is 5%, and they're expecting about 4% after that. This is one of the lowest on this list. So this is what you expect from a home improvement. They're not technology companies. They do open other stores, but they can't grow it basically that fast. They're not like these type of companies. Now, 14% premium right now, $282 per share. So right now $371 per share. Now, looking at this, Seeking Alpha is saying analyst is saying it's actually buy, and is Wall Street, and $379 per share. That's about 2% upside from where we are. Financials, we are now looking at, so this company makes a lot of money, but it spends a lot of money as well, as you can imagine. 100 base from $83 billion in 2015 to right now $152 billion. But look at this, they're spending about 100 billion of that, the cost of that revenue, which is absolutely crazy. But they're still taking home gross profit about $51 billion. They've done a loads of basically, of course, paying off all of these things, the taxes and all that stuff, and then the net income that we're after is about almost $15 billion, which is absolutely amazing. That's why they have an excellent free cash flow here. Now, the next company we're looking at today is Merck, another pharmaceutical company, one I own in my portfolio. They have basically a key basically drug for cancer, which is called Keytruda, and that can basically sell is that's majority of their revenue comes from there. But they have a very well diversified portfolio. 295 billion market cap, wide economic, about 117 billion, $117 per share right now. Over 2.6% when it comes to dividend yield, which is quite nice. The payout ratio only 46%, and latest increase was 6, and the 5-year growth rate we're looking at about 9%. Dividend streak of 12 years. Annually, they will give you $3.08. Safety 99%. Again, the highest that any company can get. They're growing their revenue nicely, about 7%. The EPS is growing really good as well, 16%. Profit margin 22%. Return on equity 33%, and return on invested capital of 24%. Now, free cash flow right now $13 billion. Total return in the last 10 years 9%, which is really good. Growth estimate for next year 21%, 86%. After that, fairly value right now $120 per share. Right now is $117 per share, so it's actually heading towards basically becoming a undervalued stock, so up 117 right now, which is quite nice to see. If you're still enjoying the video, please like the video, subscribe to the channel. It makes a absolutely huge difference, and don't forget to join us in the Patreon account. Now, looking at Wall Street analysts, basically there's about 18 strong buys, which is really interesting. So this should be strong buys, but because there's 4 holds there, that is slightly changed. And as you can see, it's about 19% upside from where we are right now. Looking at the financials, as you can see here, basically they made for the basically total revenue, this is the line that we're looking at, $42 billion into basically in 2014 to right now $62 billion, which is absolutely amazing. They spent about $15 billion in the recent last 12 months, and $47 billion of that is gross profit. As always, they've done quite a few things with that. So basically research and development is quite a huge thing for these pharmaceutical companies. Total operation cost is basically was about over $27 billion, and then operating income about $19.7 billion. They paid some taxes and all of that stuff. So the net income, we're looking about $13.7 billion, which is basically what you would see here as a net income, basically as a free cash flow. So it's very interesting. So what their net income is very similar to their actually the free cash flow, which is really good for this company. This is one of the reasons I like really this company, and I've had it for a very long time. I wish I bought more. I'll share that with you at the end. Now, the next one is waste management. This is basically a company that collects garbage and recycles and does all of these things. You would think they wouldn't make a list like this, but they're actually high quality business. $84 billion, wide economic mode, just over $200 per share. Dividend yield 1.4. The payout, we were looking at about 42%. Latest increase was 7%, and the 5-year growth rate of 9%, which is really good. Almost double digits there. They've increased that dividend 20 years, so 5 more years they will become a dividend aristocrat. You get $3 every share of this company that you own. Safety 74%, which is very safe. The revenue is growing about 14%. The EPS is going about EPS is growing 14%, and the revenue about 7%. Profit margin 12%, return on equity of 35%, and return on invested capital of 16%. Now $2.1 billion of free cash flow right now. Total return the last 10 years 17%, which is absolutely huge from a garbage company. That is absolutely crazy. Growth estimate next year 10%, then 12% after that, but it is quite expensive right now. 23% premium, $170 per share. So some of these companies are very expensive. You don't necessarily need to rush and buy them right now. You will see if something happens in the market, especially in September, especially because of basically the fact that in the US they've got the elections and other things coming up. Things can easily change, so you might see 10-15% drop in the market. Then potentially you can look into any of these companies and think about, you don't necessarily need to rush into buying them right now. And just finally, to show you waste management, as you can see here, is all across everything basically. Seeking Alpha as well as Wall Street as quant, all of them are saying is actually buy right now. And if we go to the financial, in fact, let me just go back here, just show you what they're saying. So 8 strong buys, 2 buys, and 11 holds and 1 sell. And as you can see, it's about 7% upside from where we are. $222 per share is where they think the price should be. Now, looking at their revenue, $13.9 billion to right now $20.9 billion. They're taking up basically using about $12 billion of that, and basically keeping about $8 billion after research and development and all other things, taxes and so on. Their net income is about $2.5 billion, and that roughly translates basically almost into free cash flow, which is absolutely amazing. Now, in terms of Sharia compliance side of things, absolutely nothing to worry about any of these companies, and this is another reason I like. So Probably this one is the only one that has a slightly higher debt, but the rest of them are absolutely fine when it comes to debt levels and things like that. So there you have it. That's the 5 companies that I want to share with you guys. Like I said, don't rush and buy them now. Do your own research. Not a financial advisor, so make sure that you do your own research. But before I finish the video, I want to show you these companies because I do own Home Depot right there. Intuit is also there, and Home Depot, just to show you guys, my average is $287 per share. I'm up about 28% into it. My average is about $546 per share right now. And who else do I own? Merck as well. I think it was 77, let's call it 78 basically dollars, and right now, as you can see, $117. I'm up about 55% when it comes to that. So that's the 3 that I own in this portfolio. I used to own West Management, and I sold it when it was, I think it was about $130 per share, and look at it right now, is about $200 per share. So these 2 companies used to be in my portfolio, and these 3, of course, I own them right now. So really high quality businesses. Do your research, find out a bit more information. Please like the video if you're still with me, and let me know if you own any of these companies, because I want to see what people own. We want to share more of these things, okay? And don't forget to join us at the Patreon account. Have a wonderful day. Assalamu Alaikum.